The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 22nd, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I do everything we can to have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone, dial on an 877-927-6648. Internationally, 727-445-1044. Of course, you can reach out by email, steve@tfnn.com. Inside the Tiger's Den, you can go ahead and ping me. Happy to take a look at whatever it is that is on your mind. This is, of course, used to be Turnaround Tuesday. We'll go see if there's any turnaround to it. It certainly is terrific Tuesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 251 points. She's traded at 16,258. S&P down 33 points at 1934. NASDAQ Composite off about 100 points at 4729. Russell 2000 down 21 points at 1140. The DAX closed off 377 points. 95.70 was its closing price. The FTSE off 172 points at 59.35. Gold is back $8 right now, trading at 11.24. Silver's back 46 cents. She's traded at 14.75. Light sweet crude back $1.38. Natural gas is flat. Looks like copper is down quite a bit. Moving to the upside today, AutoZone, that's moving up $13, about $13 right now, almost 2% to the upside. Allergan up $1.80. You've got Vascular Biogenics up $1. So nothing up large. To the downside, a different story. Google off $16. Amazon down $11, $12. Valiant Pharmaceuticals off 10. Illumina back $8. BlackRock off $10. Sherwin-Williams painting the town red off about $8 as well. Of course, Volkswagen really taking in the shorts, down 19%. So where should we begin? I think we need to take a look at some different time frames out here. First, what we'll do is we'll just go take a look at the short-term time frames, see if there's any potential turnaround on this Turnaround Tuesday. And then let's step back. Let's understand where we're at. Let's understand what is likely to happen and the reasons why. So let's do that. So let's get into it right now, and let's get into it by taking, oh, by the way, the volume inside the market, it ain't there. Now, I shouldn't be using the word ain't, but it's not there, okay? It is not there, and we'll come back to that. So the move, well, actually, I'll just do this real quickly. We'll go really ultra short term. I'll just put up the 10-minute charts on my screen here. And you can see this is where the market opened at 9:30, actually pushed higher on the NASDAQ futures. That's the left-hand side of my chart. Same thing on the right-hand side, which is the ES Mini futures out there. And we've seen price certainly move down. We've seen most of price destruction taking place before the market opened, but we've seen some additional price destruction since then. But we aren't seeing volume increase when we take a look at just simply the 10-minute futures contracts. When we go take a look at the ETFs, it's actually laughable at this stage. Now, it's not laughable with regard to price. And it doesn't matter whether, you can move up on light volume. For goodness sakes, we did that for 5 years. You can also move down on light volume as well. The bottom line is there isn't any conviction, meaning volume-wise, behind the move. Is that good or bad for bulls or bears out there. Hey, let's face it. If you take a look at the cues out there, you don't really want to see volume come in here today, because if you do, it's the sign of a short-term bottom. So whereas maybe somebody might take that statement and say, no, you're wrong, if you're on the bearish side of the trade out there, I'm telling you, I can tell you from past experience, the last thing you want to see, well, unless you want to get out of your trade, is to go ahead and see a high volume day to the downside. So you don't have that as we take a look at the markets as of 111. That can change in a heartbeat. Now, let's go take a look at our 30-minute charts just to understand if there's any potential for at least a bounce or bottom when we take a look at turnaround Tuesday out here. Again, we're going to put all this in perspective. Now, what our 30-minute chart for the futures contract shows happens to really show the same kind of thing that we just looked at on a 10-minute basis. Price has been moving lower all morning, all early afternoon long, with less relative weakness. See how price has been moving down? See this black line on our chart? That's the only thing that you really got to focus on out here. We don't need to worry about the bottom indicator as we speak right now. But what we have not seen on the NQ is we haven't seen any kind of bullish reversal signal. You'd get a piercing candle or so if we saw a close, probably around 42.34, 42.35, somewhere around there, only about 3 points from where we're at right now. But that close needs to take place at 1:30. It doesn't mean a hill of beans as to what it's trading at 1:12 in the afternoon. So remind me at 1:30. Let's go back and take a look at the 30-minute chart, see if there's any kind of bullish reversal signals, because that would be the start of your potential turnaround Tuesday. Now, when I say turnaround Tuesday, it's important just simply to understand where bounces and or bottoms can form out here. Look, it happened up here at the most recent top. This was back at about 11 o'clock in the morning, back on the trading day of September 21st. Why would you think that it wouldn't do the same, have the same effect as the market has been moving lower out here? Again, no bullish reversal signal. You had a little shooting star back here where we formed that top at 11:30 in the morning. That was back again on September the 21st. Today, September 22nd. So that's the NQ. If we go take a look at the ES mini out here, guess what it's also doing? It's moving lower with less relative weakness. Now, what's interesting about this pattern out here, let me just actually blow it up. We'll just move it into the center of the screen there, a little bit more center. We did have a bullish reversal signal right here. This was on the trading session at 12 noon, and we got a little bit of a move higher, a little bit of follow through on the very next candle session at 12:30. But, you know, there's different tools that people use. I saw Jay or someone was in the den using a trend line on a 5-minute chart. There's a 30-minute chart out here. What we can see is that little red squiggly line. I believe that's the 9-day exponential moving average on our chart. We can see how that line also on a 30-minute basis has been acting as resistance. So even though we've got this price relative strength divergent pattern, price moving lower without the actual conviction behind the move, and we saw the first bullish reversal signal, what you and I now know for certain is that that moving average line is acting as a resistance level. That says in order for any kind of move to potentially get going, you're going to need to see a close above it. It's priced at 19.25 right now. Let's just make it easy. We'll just simply call it the point of control on the 30-minute basis. That would say you need to see it close above 19.2875. We'll just give it the more conservative approach. And if you see that, then guess what? You've got some type of bounce, at least that's coming. Your next move will be up to about the 19.35-ish level, and that's on the ES Mini. Now, look, it is consistent across the board out here, because if we go take a look at what's going on inside of the Dow futures out here, we can also see that it has been moving lower. We got a little blank screen here. I'm just updating it just to make sure that that pattern is in play, and voila, it most certainly is. So price has been moving lower, less relative weakness out there. We did get the bullish reversal signal. We did get some follow through on that 12:30 candle, similar to what you and I just looked at on the ES Mini. What went ahead and repelled it? It is that 9-period exponential moving average line out there. So that being the case, both you and I know the first evidence of any kind of, because we know price has been moving lower without the conviction behind it. However, there hasn't been any conviction to the upside either, right? Every time that the bulls, in this case here, I wouldn't say every time, but any time that the bulls have tried to find a bottom and push it higher, guess what? They failed at that line. The first time you get a close above that line inside the Dow futures, 16,162, 16,170, I would say, is the number. You get above that, look for a move up to the 1602, 16,206 area. Doesn't mean it won't get sold off, but that would be your first indication that turnaround Tuesday could be rearing its ugly head. So that's on the short term. So that's where I wanted to start, just so that I can at least give everybody a feel as to what's going on inside of the market. Now, another area to be paying attention to on the daily chart, there's this little blue horizontal line going across my screen. We'll go ahead and blow it up out here. Now, that blue line happens to be the top of the TAS box from a daily standpoint. So that says that should be old resistance, should be new support. So another level to also be watching for by the end of the today's trading session in the NQ is going to be 42.33. If price holds that, what does that say? Well, it depends on where we actually finish. I could tell you at 116, if this is in essence where we finish or just slightly above that, you've got a VIX index one-day rate of change of 16%. Here's what I can nearly guarantee you. When I say, because my guarantee in this case here could only be 90%. Why is that? Because it only works 90% of the time. How many people give you something that works 90% of the time out there? 90% of the time is if you were to have a one-day rate of change of 16%, you can anticipate, you can expect, you better expect to see some kind of bounce out there. How would you use that? Look, if you're trading the futures contracts out here, you'd close out your position, you'd try to sell it at a higher price. Just as simple as that. Or you would at least make sure that you've tightened up your stops, because that's what you should anticipate. How high of a bounce really depends on the patterns that we just took a look at inside the 30-minute charts and so on and so forth, and profile levels, things of that sort. Okay, so now I think what we've got, one last thing here with regard to the intraday and where we're at. What's really interesting out here is the move lower inside the New York Stock Exchange has the price oscillator nearly at break even. I mean, it is just slightly negative out here, just slightly negative. So any kind of bounce, this thing is going to reject that zero line out here. And I'll have to go, really? But it is an important statement out here. So we'll see. And with regard to the Dow, I believe all 30 stocks are to the downside, so its oscillator can't get any lower. It's really just sitting on the zero line out here. Maybe there's one Dow stock that is green. I don't know. But what we know that it's sitting, that's the right-hand panel of the screen out there. We know that it's just sitting right there at the zero level. The NASDAQ composite slightly below its level. Okay, so now let's go ahead and totally reverse where we were coming from, which was take a look at, we started looking at a 10-minute chart, then 30-minute charts, and now we've built up to a daily chart. But let's step back, let's hold our breath, let's take our breath and get a better feel and understanding as to what the markets are doing, what it is that you can anticipate over the long haul out here. So the first place that we should start with our no, we don't want to start there. We should start with our, I thought I had this out. Right here. We should take a look at our trends of the 6 indices that you and I follow to understand where it is that we're at right now today and what's really important to be paying attention to. So let's start off with the Dow. So as we take a look at the Dow, we know 2 things. Actually, we know 3 things. And it's that third thing that's most important. You've got to wait till we come back from this break. We got to go pay some bills out here with some of our wonderful commercials. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's off 267, S&P down 35, composite up 103. So as we were going into that break, we were taking a look at the Dow chart out here. The two things that you and I know about the Dow, the most important things that you and I should learn and take a look at inside the Dow, simple things. Just taking a look at the trend lines out here. If you take a look at the trend line in the left-hand call from lower left, upper right, trend line coming off of the 1994 lows, up in essence into the 2007 top. As soon as that trend line was broken, we saw a bunch of sideways movement up until that point in time. Prices went ahead, moved lower into October of 2002. No surprise out there. If we take a look at the bottom of October in 2002, all the way up to the highs in 2007, if we go ahead and we draw that trend line, as soon as that trend line was broken, and it certainly was broken with conviction in June of 2008, that's what led to that bottom in March of 2009. If we go take a look at that bottom in March of 2009. All the way we use as touch points October of 2011 out there. What we're going to see is that price is right now just slightly trading below that that rising trend line out there. If we see it close, and it would preferably not be right here. If you see it right here at the end of the month, It's only the 21st, 22nd, I believe. Yeah, it's the 22nd. So we've got a bit of time out here, over a week, right? A little bit more than a week. If we take a look at, so if we're here, it's Tuesday, so it's next Wednesday, right? September 30th. So next Wednesday, if it's sitting right around here, it's not a whole lot of conviction. If it finishes well off into the bottom of that August bar out here, down towards the bottom, 15,370, somewhere maybe a little bit north of that, then we're going to see a clear break of that trend line out there. And if we just simply look at the past, what you and I know is when you see a break of that trend line, that spells trouble. Now, if we take a look at another trend line out here that is held on a monthly basis, let's switch down and take a look at the Russell 2000, because the Russell 2000 is not anywhere near its rising trend line. But if we do see a close below this little trend line off of the tops from 2000, the top in 2007, a level that is held on a monthly basis consistent, it's been tested, it's been rejected, and it's trading very darn near that level. I'm going to guess that level is right around 1126 or so. If we see a close, so therefore, if we see a close below or at last month's lows out there in the Russell, 1102.57, you will have a break of that trend line, and price ought to fall down to the rising trend line inside off of that March 2009 low out there. But hey, it's the New York Stock Exchange, which is trouble. And it's in real trouble out here because it looks a little bit like the FTSE. And when I say it looks a little bit like the FTSE, what I'm referring to is it took a long time for the New York Stock Exchange to get above the 2007 high. And once it did, it came back, it tested, and it rejected that level. It did it back here in October 2014. But now we're clearly trading back below that. Here is, in essence, the consolidation pattern. It's a large consolidation. It's a 6,000-point consolidation pattern. And when you close back inside the consolidation, it says you can go all the way back to the bottom. Look, that's not my forecast as we take a look at it at this stage. There's other places to look at. But the point here is that the New York Stock Exchange has already failed at one level of support, 10,387. The second level of support is that rising trend line off of the March 2009 lows. If, in fact, the New York Stock Exchange is to go visit between now, not visit, but close there next Wednesday afternoon, which is around the 9,500-ish level out here. You're at 98.56 right now. We'll, in essence, have three of the indices broken through trend areas that in the past have led to bad outcomes out here. And there is no reason from a long-term perspective to believe that we will have anything different occur out here. So we want to be paying attention because inside the NASDAQ composite, we don't have that issue. Inside the transports, we don't even have that issue. You know, the transports got trashed, so to speak, out here. But if you really take a look at trend lines inside the transports, they really, in essence, haven't fallen apart. They just simply rose faster and quicker than some of the other, let's say the Dow itself, if we just simply compare the two out there. So that's on the longer term picture. Now, if we also go take a look, this is for, some people are already familiar with this workout here. And if you are, I appreciate you sitting through it again. But it's really important for folks to see and understand what's going on. And if we go take a look at the S&P as an example, what we're also going to see is the pattern. You and I, on an intraday basis, took a look at price moving lower with less relative weakness. And when price moves higher with less relative strength, it's always a bad scene. In fact, if there's any one single pattern that is consistent, that is called every single major top that we have seen, it is with price going higher with less relative strength out there. And that's the pattern that's in play when we take a look at the S&P, New York Stock Exchange, not the Russell 2000, the NASDAQ composite, the Dow. I probably mentioned the Dow. So we come back, we'll continue taking a look at this and some other interesting things as well. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 264, S&P down 35. Thank you, Mr. Bill. Reminder at 1:30 to check on those bullish reversal signals. I did that during the break, and there's nothing there. So no bullish reversal signal. Earliest time period now that you could see one would be at the 2 o'clock session. So remind me, there's a few minutes before we go off the air. We'll go take a look at that, and then you would need follow-through on the very next trading session from 2 to 2:30 in order for any potential short-term bottom to form out there. And short-term because what you and I were starting to now take a look at and to get a better feel for and what we're watching for is the larger time frame charts out there. And let's just put the Dow. We'll just stick with the Dow at the moment. So in the case of the Dow, we know the price, here's the trend line on this chart as well. We know that the Dow, which had really been traveling in a 17-year consolidation pattern, I figure about 7,500 point range, gave you a price projection of 21,500. However, that 21,500 is going to have to be put on hold if, in fact, we see a break of this trend line. Now, when I say a break, I'm referring to a close below it on a monthly basis. I don't know if we're going to get it this month or not. We'll just find out. I don't know if we're going to get it next month or not. What I do know is that when we do get it, all we have to do is go back and take a look at past pattern behavior to understand what the likely outcome is. Now, as I mentioned, if we take a look, you can see on my charts out here, if we just take a look at the 2007 top, the 2000 top out here, what we can see is that price has moved higher with less relative weakness as we have in essence formed this top out here. So we know that the trend line, and we've gotten to a seventh wave move as well out there. That's that letter G that is up there on a monthly basis. So we've got all the similar patterns that are out here. So what we now can do, or at least what I've done, those of you, you're familiar with some of my due diligence work out here. This is the chart that is actually more amazing than anything else that I've actually, any of the work that I have, in my opinion, that I've done out here. And that's this. And that is with regard to the roadmap, the triptych ahead as to where it is that the market is likely headed if, in fact, we go ahead and break those trend lines. That's really a key out here. And if we take a look at it, it's this chart right here. And this chart takes a look at, and it's actually amazing when we take a look at the day that the market made its top in 2000. That's the red line that's on my screen. That is January 14th, 2000. If you take a look at the exact day that the market made its top in 2007, it was October 11, 2007. Those are the starting points right here for the graph that I have on my screen. Now, what you and I also know is the actual high inside the Dow has taken place on May 19th, 2015. And so if we start day by day, meaning trading day by day, that's what this chart here represents, we can see the similarities, the uncanny similarities with regard to price movements inside of the charts. More importantly, it's so uncanny with regard to that August 24th low, where in essence, all we had to really do, which I didn't know at the time, right? After we got that August 24th move lower, I then started going back and saying, well, here's what we know about the top in 2000 and top in 2007 on a monthly basis. And then I just said, there's a gift in every set of circumstance, right? So it was like the 2x4 hit me upside the head. I said, I wonder what would happen if I actually started with the actual day the top formed in each of those and compared it to where we're at in our current cycle out here. And darned, you thought I was going to say, dang, didn't you? I didn't. Darned if it didn't show this amazing correlation with these huge moves down into the same type of time period. That being said, as I take a look at 2007 and 2000 out here, which pattern is it following? I'm going to, at this stage here, go with the, and it almost doesn't really matter because the patterns are relatively similar. However, my belief is that it's more following the 2007 top than it is the 2000 top. Now, this does not have anything to do with the suggesting that we're going to go all the way back down and test the bottom of 2009. That's really not where I'm going. We use this as a directional indicator. That's all that this can be used for. It's not meant to quantify and determine the number of points. We've got to use other tools, and you and I have plenty of other tools to use for that. But what this does say is that the next big move we haven't even seen yet. And that next big move, if we follow the 2007 analog pattern out here, that's going to take place right around, or it should start taking place right around October the 1st. Right around October the 1st. So here we've got a market that's moving lower in 2007. We saw that coming off of this top right out here where my cursor's at. Anticipate a bounce. Anticipate that it could be a relatively significant bounce. I don't know to what extent, but don't underestimate the market's ability when you've got a VIX index greater than 1. You got a trend reading right now that's at about 4.5. I don't know what it's going to close at today, but if it closes above 2, put your money on the fact that the markets are going to bounce. The markets will absolutely bounce. Now, that's a bounce that you might want to take a look at selling and building up short positions inside the market. I can't control what the market does, but you and I can most certainly take a look at what the market has done and be able to anticipate it. Now, what this also shows out here is that after we get the next real scary bottom, if we follow along the same analog pattern as 2007, even if we follow along the same analog pattern here as we did in 2000, we're going to get a real nice, healthy rally. We're going to get a rally that lasts into the, probably the early part of maybe right before Christmas. How high, again, this is directional out here, but this is what it is that we can anticipate. There's only one other thing that says that that's not the case, that we just simply continue going straight down, and we just simply, these analog patterns eventually stop being analogs out here, and that's always a possibility. But right now, this is what they're doing. We've got a roadmap, and that roadmap says that the market actually doesn't make any kind of real significant bottom until 2016. And I've got a couple different tools that say February, middle of February. Maybe it's the April time frame. I'll look at maybe just simply using something as simple as the Chapman wave counts to the downside as we get there. So that is the longer term perspective. And I want everybody to make sure that they understand that, because sometimes I focus a little bit too much on the intraday charts to give you an idea as to what the markets are doing. But it's really important to understand those trend lines. It's very easy for you to follow along with us at home. You don't have to worry about any other outside influences. You know that the patterns of the past are the patterns that are present right now. Does the past equal the future? It doesn't for you and I as individuals, but it does for the market for the most part out there. Now, when we began the show, I said, where is the beef? I actually didn't say that to you, but I did post that inside the Tiger's Den. What do I mean, where is the beef? Well, what I mean, where is the beef, is if we take a look at volume, as we came into 130, as we came into a 4-hour time frame, and if Stevie just takes a straight line map of the QQQ ETF, right now you're at 30 million shares. As we came in, we were at about 29.8. That says on a straight line basis, the Qs are going to do 48 million shares today. 48 million shares. Now, on the trading day, let's do this. Let me get rid of the retracement levels. Let's get rid of that. I'll put this little box off to the right-hand side. So those of you following along on Tiger TV, as my crosshair goes across a bar out here, you can see the volume, as in the bottom of the screen. Right now, I'm at the trading session of August 26. We're almost trading into that August 26 high in the QQQ series was 103.23. The low so far today, 103. Oh, shoot, we did trade it to 103.13. You're at 103.31. So that bar had volume of 104 million shares. We're going to do 48 million shares today, maybe 50 million shares. I mean, that was straight line math out there. Where is the beef? If you go take a look at the swing point on the way down out here from September the 1st, because in essence, that's certainly something that you could gauge. We haven't gotten, well, I don't know, did we get down to the high 103.29? Yeah, I guess we did, 103.13. So if we use that as a swing point to the downside, that had 73 million shares. You're going to do 48 million shares today, or somewhere around that, inside the QQQ series. There's no volume there. Now, as I mentioned, that's actually bearish, not bullish. Like, we get a rejection of a swing point, you get a bounce. But the reality is what the Qs do, what they have done for what seems like forever, for 7-8 years, they've made bottoms with volume out there. So you don't have that in play here today. But you can see there really is no conviction behind this move to the downside. There's at least no conviction inside of the Qs. The IWM may be a little bit different story. Let's go take a look at it. And let's get rid of these. I don't even know what those retracement lines were on this. But let's go take a look at it. And here's what you're going to notice. We've done, not we, but not you and I, but the IWM has done 24 million shares. 23.2 as we came in that 130 session. Straight line mass is 37 million shares in essence. What it's testing out here, when it last moved higher on August the 27th, it did 49 million shares. 49 million shares. Even the swing point from September 1st had 45 million shares. You can do 37 million shares today. I don't think so. Now, look, it's a problem that you're closing inside of the swing points of August 24th and August 25th. That's never a good sign out there, and you're well below market profiles. The point is this. There is no volume behind this move, at least in the Qs and at least in the IWM. So let's go take a look at the SPYs out here. Let's play I Spy. And I spy that right now the SPYs have done 83 million shares. They did 80.6 as we came into 130. You do the straight line math on it, you're going to get 131 million shares. 131 million shares. Look, this little swing point out here, we'll call it a junior SEO swing point from September 1st. At least on that move to the downside, it had some kind of conviction behind it. 256 million shares. 256 versus 131? I don't think so. There's no rejection of any kind of swing point out here, but you can see really nothing behind the move inside the SPYs. So price-wise, absolutely. Long-term wise, absolutely, especially if those trend lines get broken. Let's go take a look at the Dow Diamonds out here. So just as the market finishes horribly coming into the close, what you need to know is there's been no conviction, no volume behind the move. You're going to see a VIX index that's going to tell you 90% of the time to anticipate a bounce within the next 24 to 48 hours. I say 24 hours. And you're going to have a trend index reading that says you've got a 90% chance of a bounce as well. So hopefully that helps you on the short-term trading, or at least helps you with regard to your stops out there. Now, let's take a look at the Dow Diamonds. You're down right now with 5.6 million shares, 5.4 at 130. That straight lines out to about 8.7 million shares out here. 8.7 million versus 19 million on August 26th. On September the 1st, 14 million shares. I'm telling you, folks, there's been some great price destruction, but there has been no volume behind the move. So what does that really mean? Well, what it means is that the real impetus behind this move out here, which is something to certainly pay attention to, it's your friend and mine. That's the Euro-Japanese yen. And if we take a look at it, I'm assuming that my screen will populate because I'll just have to tell you a picture about a blank screen out here, and that's no fun. But if we take a look at this currency pair, it's just gotten shellacked. It's been taken out to the woodshed, and it has been just simply creamed. But what we're going to try to find out here, assuming that this screen will populate, and why it's not, I don't know. What we were going to look at is where, in fact, does price move down to for it to be able to find support. And it's down a little bit further, which then says, hey, you could expect the handoff to Asia, then to Europe to look pretty bad, get that currency pair down to a level of support. And apparently, I'm not going to be able to show it to you. Why, I don't know. That's pretty wild out there, but that makes it, well, that's interesting. I got the euro itself, but why not the euro-yen? It's a conspiracy. It is a conspiracy. There are people that are absolutely, it must be a conspiracy of the bears out there, but I can't tell you what's going on. You can look at my screen, and you can see how far it's down, and my screen shows down 239. I'm wondering if I've got an internet data issue here. Now, that's a real problem, because it's going to be really hard for me to show you what's going on. I got to really, so that's pretty wild. It stopped. I got to look at the screens out here, other screens. So yeah, looks like the composite. There we go. We're back in business. Whew. How about that for a bit of a delay? I was going to have to tell you a story or two, maybe even a joke. How about that one? It's still not the euro yen. Oh, I probably shouldn't touch it, because once I do that, look, my screen freezes up. Okay, so I won't make that mistake again. But I can tell you, if you just look at my main screen out here, you can see that it's off. It's trading out at 133.36, and it's down quite a bit. And that's really the energy behind the move today, because it's not volume. It's not volume from a selling standpoint. But with regard to the market trying to overtake the direction of this currency pair, it's very, very, very difficult out there. Now, what that also says, because this currency pair is not going the other way, meaning to the upside, that that there's real problems in River City. In fact, it supports the break of those trend lines eventually. Sooner than later is more likely to be the story out there, the storyline. So as we come in at 148, the Dow's off 248, S&P's off 33, Composite's down 100. Let's take a look at a couple of stocks out there. Let's go take a look at Apple. We were taking a look at the Qs. I would assume now that Apple does not have any volume behind its move. So it's 149. We've been trading for almost 4.5 hours. We'll go ahead and we'll elevate the volume just a bit. You're at 30 million. We'll give it 32 million shares, let's say, within the next 10 minutes. That says you've got about a 46 million share day inside of Apple. And what is that going into? Good Lord. Even the swing point, even what it's trading into from September 18th had 74 million shares. You kind of get the point. There's no volume to the downside in this market. So what could you anticipate? Long term, you and I are clear on that. You get these breaks of these trend lines, you're going to be going down with nice bounces into February of 2016. But along the way, anticipate a bounce tomorrow. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 255. S&P's down 34. Let's go out to Nashua to Lou. Lou, thanks for calling. Thanks for holding. How are you this afternoon?
Very good, Steve. And you?
Excellent. Thanks so much for asking. Today, you're interested in the gold miners. Which one specifically?
Just the GDX.
The GDX. Okay. Let's go take a look at the GDX. Are you in this trade, looking to get in?
Well,
Tell me what.
I'm looking to get in, actually, NUGT.
NUGT. Okay, so we'll go take a look at that. I've got the GDX up on my screen, so let's take a look at that for the overall minor sector. The pullback today is on 24 million shares. The GDX broke out on the trading day of 9/16 with 81 million shares. So it was 81 million shares was the breakout. The very next day, 79 million shares made an intermediate term top with 53 million shares. Yesterday's pullback, about 58 million shares, and today much lighter volume on the pullback. So that's a good thing. If we go take a look at Nugget, NUGT, and take a look at it, the pullback right now, you're trading at 274. This thing had broken out with 62 million shares back on September 16th, so volume appears to be light on that pullback. At this stage, if you're looking for an entry point, you could enter here. You would have a stop, use proper money management. You certainly, wherever it would be that you would enter, Lou, whether it's here or it's at $2.49, your stop would be placed underneath a close below 236 inside of NUGT. Now, in trading the nugget out here, you really need to see a number of days moving in one direction, preferably to the upside out here, in order to get any kind of real movement behind it. Because this is a 300% ETF, and you really have to get a trend that starts moving out there. So the safer trade may actually be on the GDX versus Nugget. But if you're going to go ahead and choose a Nugget, I would say if it closes below 236 for whatever reason, that's a problem. There's something else that's going on out there. Everybody's thrown out the bath and the baby and everything else out there. But so far, the volume on the pullback is light out there. That's what you want to see. Does that help you?
Yes, it does, as usual, Steve.
Oh, okay. Well, almost as usual. You called yesterday looking for a short entry on the on that SPXS, and I wish I had told you, hey, buy it right now. But I didn't, based on what we saw in the charts. There's always another trade out there.
Yeah, I did buy it anyway.
Okay. Hey, there you go. Well, thanks so much for calling, Lou, and have a great afternoon.
Thank you.
You bet. Folks, as we come and wind down the hour out here, I don't know what else it is that you and I could take a look at. I wish I could get that chart for the Euro-Japanese yen up on my screen out here. That is really the push lower that is inside the marketplace. There's nothing else really that I can see for us to take a look at. We've got pretty much everything else already set up out here. You've got gold trading back about $8. If we take a look at light sweet crude, this thing here has been trading sideways. I anticipate that it'll continue to trade sideways out here before it makes its next move. And that's what's going on there. If we take a look at, I don't know, what else is there really to take a look at? Not a whole lot. If I go, let's go take a look at the number one sector inside the S&P 500. Let's go take a look at its volume perspective out here. 5.5 million shares today, pulling back into like 21 million shares from September the 1st. Telling you. Just no volume. And this is one of these markets where one day it gives something to the bears, the next day something to the bulls, and it's been doing this basically since January out there. So nothing here has changed. Folks, stay tuned. Our man David White is going to be up next. Have a terrific Tuesday, and I'll see you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.